Felix here, and happy Thursday to you. At least I think it's Thursday. It is green and green and green, much like a Christmas tree or, I don't know, a wheatgrass shot. They're fairly disgusting, aren't they? Have you tried wheatgrass shots? I had a doctor once who told me that was the thing to do. I did it for about 2 weeks. I didn't enjoy it. My cat does, though, but that's not what we are here for. We're here to understand what the Fed has just done, how they've set the house on fire in a good way, and what the jobs data is just out, how you can make more money today, Palantir earnings going through the roof. It's a good day to be, well, an investor at least. If you're in the chat here, David Estrada, you got bitten in the neck by our bot who doesn't like captions or spamming. Yours might be well intended. Our bot is not. So let me show you the screen here. Of course, none of the following is financial advice, just an old banker sharing his thoughts. Well, I think I'm fairly young, but some people don't seem to disagree. It's all relative. S&P up almost a percentage point. The Nasdaq up over a percentage point. The VIX, the fear is down another 3 points. The dollar is down, which is glorious unless you're American and trying to go on holiday. And orange juice down 6%. Wow. Wow. I know you all care about orange juice very, very deeply. The stock market, this was yesterday. But let's look at the pre-market here. And that looks pretty good, doesn't it? It's green. Everything's greener than a percentage point, which is glorious. So very, very nice morning. How did this happen? Why have we gone from like fatalistic, standing on the ledge, one leg lifted in front of the other and going, we might as well end it right here because it's all doom and gloom and we'll all drown in debt and it'll be terrible. So to bull run. Well, okay. We'll go through the Fed in a second here, but this is the data just out. Maybe I'll take a screenshot of it. We can scribble all over it. Why give up the opportunity to scribble when you can scribble? And then we'll talk about exactly what the Jerome said yesterday. Jerome's a fairly unusual name, isn't it? I've got one friend who's called Jerome, but not many. So we've got job cuts, less than expected. That's kind of an interesting one because it might be that it probably means the labor market is still fairly tight. So I would say that's probably a negative. Right? You're not cutting jobs because you think you can't replace them and that sort of thing. Jobless claims are coming in basically at exactly the number that was forecast. And that's never happened before. In the 600 years of economic forecasting, no one's ever been right until this momentous occasion. And that just means it's almost as if someone's like scripting this, right? It's almost as if someone's telling the statisticians who put together the initial jobless claims what they'd like the number to be. But of course, that's impossible, isn't it? Just impossible. We've got labor costs coming down 0.8%, while we were expecting an inflationary sort of 1 to 2%. That's gloriously glorious. The continuing jobless claims are ticking up ever so gently, almost as if somebody whispered in the ears of the person who made up the data, soft landing, and did it all night long, like some sort of ASMR tape. So this is actually also good because it's just easing us towards a very soft landing. And then the 4-week jobless claims is also exactly as predicted. Once again, something that's never happened in the human history of economic forecasting. So somebody should get fired, really, for getting it right. And so, yeah, good news, right? Good news all around. And if you look at the other markets reacting to this live, that's after the 250 of you who haven't found the like button yet have smashed it so that I don't go on strike. Imagine if YouTube is unionized until you hit the like button. That'd be fun, wouldn't it? So the data came out, 8:30? 8:30. And at 8:30, we were here on the S&P, and we've gone up quite nicely since. On the QQQ, it came out also at 8:30. There, and you can see the big jump in algo tradings there. And again, we've gone up, not monstrously massively, but, quarter percentage point. So it's kind of the afterglow of what Papa Powell said yesterday, which is what we should look at. Jason, you have audio but no video. Got the radio on, maybe? Hit the like button. Thank you very much for that. Like is smashed. Brilliant. You're going to lose your shorts today if you're short. All right, so let me walk you through what Monsieur Le Paul said yesterday. And he said, the question we're asking is, should we hike more? The royal we, that is. That's how His Highness likes to be addressed. And he said the Fed had held off on raising interest rates for a second consecutive policy meeting. Slowing down is giving us, I think, a better sense of how much more we need to do. And then this is the sentence that set the house on fire today. If we need to do more. It's the if that's got us excited. And I know we're a strange lot who get excited about one word in what he says, but he thinks quite carefully about what he says. He appreciates that we weigh up every half sentence on our little scale, with gold bars and that sort of thing. So he's basically saying we may not need to do more, right? Because it's if we need to do more. And he's discounted all of the more positive economic data we had out in the last 2 months, and he's still paused. Still possible we get a rate hike in December, but at least this one here is going to give us probably some good weeks. And what happened? So Papa Powell spoke, and the 2-year yield plunges. That's a funny word to describe a yield, isn't it? Anyway, it's below 5%, which is good because that means that's good for stocks because bonds have become a little bit less attractive. Anybody who owned bonds just made some money. And look at what happened here. This is the VIX upside down. You're turning me. And it's coming down. This is a strange way of displaying it. But the idea here is that the gap between the S&P and the VIX is fairly wide. And that generally gets filled. Like here, it got filled. And it's fairly unusual to have these large gaps. Like here, we had a gap and it got filled. So there is a chance that the S&P could rally. And if you followed the VIX methodology, you'd get back up to sort of 4,360 or thereabouts. And that's not precise science, of course, but it's just an indicator of where we might be heading. Now, if you are heading anywhere on the coming Tuesday, it should be here, because if you want to learn how to trade just the one stock purely on rules, no emotions whatsoever, just a pure rule-based system, you set up the trade, you automate the profit taking, you automate the stop loss, you automate the whole thing so you can have a life and you only need to spend like less than an hour a day on this any time of the day, 75% win ratio, then join me on Tuesday at 10 a.m. Eastern time and make a step towards glorious financial freedom so you too can hang out on the beach or on the yachts or wherever, Jerome Powell roams around these days. Now, this is another reason I think why the Fed is pausing, because this here was 2006-7, which was, by the way, followed by 2008. That might seem obvious to you, but 2008 was the global financial crisis. And right now we're up here. So we actually raised rates more, faster, steeper. So it kind of just makes sense to go, let's see if something else breaks. Not just the 4 banks that we broke in March this year, which, by the way, the bank bailout program expires in March. Anybody who thinks that isn't going to get extended, your head is full of wool, is what I would say. So fill it with something else. Keep watching. Smash the like button. Thank you for the 149 of you. And the other 300 of you, go away or smash the like button or the dislike button. Equally good for the algorithm, quite frankly. Now, there is a chance here that as yields come down, that the bond CTAs, those are the bond algo traders, the auto traders who live terribly exciting lives of watching charts, and thank you for those likes there, I appreciate them very much. If the market goes up, the bond market that is, so yields go down, the bond values go up, they work in the opposite direction. Very, very confusing. I know, I don't know why they do it that way, but that's just the way the market works. There is a potential for them to buy almost $100 billion. $100 billion, he says. Where's my cat? I should be holding a cat sort of viciously. While I say that, that would mean yields would come down quite a bit more. Right? bond prices would go up and anybody who owns bonds would make some money. So possible. And that would also mean, well, stocks should become more attractive. Now, what about stocks? You probably care more about stocks than bonds. The uptake over the month, and I showed you this 2 days ago, for those of you who paid attention, we're expected to buy about $207 billion over the next month if the market goes up. And according to Goldman Sachs this morning, they've revised that up to 240 billion. So there could be a real buying bonanza here. Add on top of that the buybacks and everything else. So we could be looking at quite a nice November. And this is another reason. This is Goldman's. I think this is Goldman. I might be misattributing this to the wrong investment bank, but I believe it is Goldman. And they've got this sell side indicator. Started in 1985, in the days where, greed was good and you could wear very wide pinstripe suits and people didn't think you were very peculiar. And essentially, when you're down here, below or at this green line, this one here, you're in extreme bearishness, which means everybody out there talked to somebody who was feeling very gloomy and everyone else is now gloomy and no one's buying stocks and everyone's going, the end is near, which has a little bit been me the last week or two. And that's bullish because if everybody is bearish, then nobody else can now be additionally bearish and therefore at some point we have to go back up. So we're kind of at near these levels. So Goldman's are actually saying they expect a short-term rally. Not a long-term one, just a short-term one. So again, an indicator here. And here is the glorious NASDAQ. And we're moving still very, very much in this kind of, maybe have a straight line, blue zone here. So we're not really like in a bull run here. We're right here, just below the 100-day, 50-day moving average lines. So we need to break out somewhere here in the direction of 14,800 or thereabouts, 15,000, to really retrace ourselves. And then up here would be another resistance at about 15,400. So we still have a little bit of a way to go, but we're definitely heading in the right direction. And we look at what the live market's doing here in a moment. S&P, similar story. So we're still on a downward trend overall. So I wouldn't get too excited. But we're trading here. We're trading again just below what I believe is the 100-day moving average line. Was it 200? I'm not sure. And then that up here is the 50. So we go back towards 4,400. Things start to look a little bit better. But then you will have these resistance lines up here, which is about 4,400. So I think we could do a nice rally up to 4,400, and then we have to see if this lasts, and then have to see what Papa Powell gives us for Christmas, because there's another Fed meeting in December, and they might just feel like snatching Christmas away from us because we've been irresponsible with those credit cards. I told you about that yesterday. And Thomas wants to know about the Santa rally. Okay, we talk about that as well. Once we get over 200 likes. You see, I'm holding you hostage here. So here's a part of the reason, and this all links quite nicely with your question, Thomas, is that the light blue line in the background. Let me see, do we have a light blue pen? No, we don't. We have a silver sort of pen. That is the average move of the S&P 1950 to 2022. Now, of course, over the last 72 years, the market has on average gone up, which is what you can see every year. So therefore, you get this kind of pattern. Doesn't mean we have to end the year at 4,800, by the way. It's a possibility, but it doesn't have to be that way. But what we've done here is, this is us, and we've strayed from the glorious path of high returns in an easy way. So there is typically, traditionally, November, December are fairly big buy months in the market. But if we just closed the gap to where we are seasonally, then that would take us back up to 4,400, which sort of coincides with the chart here. So I think it's a possibility. I think 4,800 is a different story. Let's talk about that when we get to 4,400, whether that's likely. Might an Apple miss turn the market down tomorrow? Si, senor. That is a big risk. Absolutely. Apple is it. It's the one stock that really matters, not the one stock that we trade because it's a little bit more risky. What we trade is a little bit less risky. We do it with a 75% win ratio. And I teach you the entire risk management protocol for free on the coming Tuesday at 10 a.m. New York time. It'll be glorious. It'll be fun. It'll take about an hour and you can ask me questions and just torture me generously. So sign up for it. felixfrenzelog.com/webinar. There are only 500 spots in totality. Now, there are no more notes apparently at the end of this, so I've run out of words. So I'll have to answer your questions now. I've tried to avoid them as long as I could. Eric, you're debt-free. Eric, that deserves a celebration, seriously. Brilliant. Go out and buy yourself something expensive. No, that was a joke. Don't do that. Fantastic. Debt-free, no more credit card debt. Amazing. If you're ever going to use a credit card again, make sure you pay it off in full. If you struggle with that, cut the thing up. Very, very simple. Yeah, amazing, guys. Let's celebrate Eric here. I love people who are debt-free. Now, PLTR, yeah, Palantir. Earnings are pretty much in progress. Good as expected. I told you about this in July that they would be profitable, 3 cents on EPS, earnings per share, and therefore they are qualifying for S&P 500 inclusion. Data came out about here, up 16% pre-market, which is actually with an expectation. That's pretty much what we guided yesterday. So very, very nice. If you look at the chart, that takes us above the 50-day moving average line. It's crazy how the stock moves. And actually takes us to pretty much near the peak, which was at 1840. So about another dollar up. Broke through the $17 resistance. Was that resistance? Yeah, that was resistance as well. So very good. Very, very good numbers. And I will, of course, I think the only negative thing I've seen so far is that government revenue missed. They've obviously done something pretty good. Better revenue. Well, the revenue is pretty flat, but they've also guided revenue upwards. So overall, I think the numbers are pretty good. Now, the only thing is that on earnings, we sometimes get these bounces and then they tend to rally up. That was actually a nice one here, but sometimes you get these things up and you come back down. So just be a little bit cautious with it. It's still a little volatile. But yeah, the S&P inclusion should actually reduce volatility because it'll bring bigger investors in. You'll have to buy it because it's part of the S&P. But from my thoughts on S&P inclusion, in theory, it could be done by the end of the year. But they made Tesla wait 4 months. So I suspect they're going to make Palantir wait. And therefore, I think the likely date will be end of March. So they do the inclusion at the end of the quarter. So the real impact will therefore be there on the 1st of April. That's kind of the way I look at it. Now, if you look at Tesla's inclusion was very profitable for people who foresaw it. Not saying the same thing's going to happen here, but I do have a video out on this. So if you want to search for Palantir S&P or Palantir Felix or something, and you'll find it. I did that around July. So PayPal earnings thoughts, full video coming out after this. Interesting picture, interesting plans. We weren't expecting everything to be over and solved the first time the new CEO spoke, but at least he said the right things. They're going to cut costs. They're going to focus on what matters. Brought in a new CFO. They're going to bring in more new people, which is definitely necessary. And he seems to be not content with the products that the previous CEO described as best in class. So I like him already, but he's going to have to pull through on this, and that's going to take a bit of time. So next quarter is going to be worse, by the way. So you still have some time to buy stocks. Old chunk of coal, PayPal. Well, it's just that the next quarter is going to have the worst margins yet. And then hopefully we're going to see the turnaround in Q1. So the January earnings report will matter, depending on like the guidance, I think. That's going to be the key thing. And they've had 3 months to kind of sack people and all that kind of thing to save some costs. That's the initial thing that you would expect them to do, which they're pretty much confirmed. And then it's really about, is the product getting better? Are they bringing people on? Are they able to get the Braintree margins up and stuff like that? So there's a lot of work there to be done. Forex has a lot of call options at 16, 17 expiring tomorrow. Can that decrease the stock price? Yeah, absolutely. You're spot on that. What's the likelihood of a moderate recession? Q1, says Matthew. Really depends on the US government's willingness to not spend other people's money. That's really what it's all about, right? At the moment, they are just paying their way out of it. Now, here, Bloomberg, Palantir headline, actually quite positive for once. I will definitely comb through all the Palantir data and give you guys my view on that. But overall, for you Palantarians out there, pretty decent numbers. Fourth quarter of GAAP profitability, so S&P inclusions coming up. 7% margins improved, revenue grew 17%, and they guided for higher revenue growth for the first time in since they listed, I think. US commercial revenue up 33%, that's pretty good. Customer count growing more than that. Free cash flow, 25% margin, that's pretty impressive. So yeah, I think just pretty good numbers, really. Pretty good numbers. Just the US government is still dragging its feet. But yeah, I will dig deep through this and as well the earnings call, and I'll let you guys know all the things that don't make the headlines, so you are fully informed. But look at this, 4 quarters of profits here, which is pretty good. That makes them now a profitable company, no longer a loss-making company, and therefore S&P inclusion is going to be coming here. So which is very, very good. Very good news. And the market rewards it with a 16% staggering increase. Bad Dog Bikes, you own November 17, 255 Tesla puts. Should I unload them now or wait until they expire? So I can't really answer that question because it'd be financial advice. But what I can say to you is, first of all, what was your plan with it? And next time you do any trade, please write out your plan. Write out your rules. Write out your why you bought it. Write out your exit rules for profit and for loss, and then set those up at the same time. Don't hang around. Don't make this sort of emotional everyday, do I do it, do I not kind of torture with yourself. Just set the trades up. Very, very simple. You can set a stop loss up in the brokerage, and you can set up profit taking. You can do that as a sliced approach or one number or whatever you want it to be. Don't wait and see. And also, you might miss the moment where you hit that sweet spot of profit. So I know that's not really answering your question, but that's what I would look at. It's like, what risk do you want to take? What profit do you aim for? And then just set those things up and just stick to it. And then you don't need to worry about it again. You have concepts even for long-term investments. You mean about exits? No, long-term investments are a little bit different. Long-term investments I would generally buy every month, come what may. And I would still write down, though, why you bought it. What were the margins when you bought it? What was the gross margin when you bought it? What was the return on invested capital when you bought it? What was the earnings per share number when you bought it? Right? And maybe even write out what the expectation was for the next year. And then monitor those numbers every quarter. And you might be thinking, that's a lot of work. Well, do you know how much work you put in to earn the money that you invest? How many hours you work for that? What are you getting paid per hour? Right? And you throw a couple of $1,000s at a share, and you're not willing to put in the 15 minutes once every 3 months to do that. That's kind of insane, isn't it? I know, most of us don't. It's crazy. But really, if you respect yourself, you respect your time, you respect your money, you respect yours and your family's financial freedom, then you want to do that. And that's the bigger priority than getting to work on time, quite frankly, because it's way more important. So you want to keep a journal. You really want to have a little notebook where you got all that data in, or do it in a spreadsheet if that's more your cup of tea. Not hitting the like button is risking a lot. Dear all, please hit the like button, says Malik. Indeed, terrible things happen if you don't hit the like button. Old tennis balls, a nice walk each day, says Loston for Winston. Oh yes, Winston he has a pretty lovely setup. He goes to the beach every morning. Typically goes to the mountains in the afternoon, and he lives by the sea, and he's got a pretty good life. And then he spends the day hanging around the housekeepers in the kitchen, hoping for vegetables to drop, which happens very frequently, I'm told. So he's got a pretty nice setup. Look, bro, appreciate that. It's very kind of you. Can you look at CYBN? What's CYBN? Subin. What do they do? Health technology, pharmaceuticals. Never heard of it. It's a penny stock. Why? Why be in something that's worth less than $1? For the thrill? For the risk? Was this ever worth more than $1? It was at one point worth $3. What the heck is this? Listed in 2020 at 60 cents or something like that? I don't know. Honestly, just don't bother. Just don't bother. It's just, I don't know. Unless you are the pharma. Okay, this is my take on pharma. If you are a medical professional and you understand whatever the heck this company does, and you have a complete insight into the research and their products, and you use it, or your friends do, or whatever, and you know this is brilliant, then by all means invest in small cap pharma, because you have a unique insight, you have the PhD and that kind of thing. Like one of my mentees, super nice guy, he's a spinal surgeon, he's a multiple PhD, and he invests in lots of pharma venture capital. Brilliant. He does really well with it. But he understands their technology. And they're actually like 100 PhDs together who understand every aspect of the medical industry. And they can call a friend and say, is this technology cutting edge, right? If you have that, you have an edge. If you don't, you're just gambling with something. So there we have it. Dave, sorry if I was a bit harsh on you. Apologize. Can you look at hymns? Somebody brought that up yesterday as well. What's with hymns lately? Is that the new, the latest, I don't know, oat milk or something, or whatever it was? It's down a lot. It's a falling knife. Earnings coming up. That's the big risk. But at the moment, it's below the 50-day moving average line. It doesn't even know where the 150 and 200-day moving average lines are, which are crossing. So we've had cross here, cross there, another one here. Yeah, it's fairly hideous. But again, I don't really know anything about it. Hims and Hers Health. Sounds like, doesn't it remind you of what was that oversized clothing brand? Kind of reminds me of that. Insider sold some shares. That's usually a good sign. Not. The latest YouTuber pumping stock, Hims. Okay, should I make a video on Hims and why it's the latest thing and it'll change the world? No, I won't do that. The company's exciting, is it? Okay, I don't know anything about the company, so I can only tell you what the chart says, which is not exciting. But yeah, it's definitely exciting. I mean, it's volatile as heck, right? It was trading at $25 at one point. Now it's trading at 80% less. So you can't blame the Fed for this one. Soon it'll be hims and hers and thems. Danzo, absolutely. Companies just rebranded to don't ask my gender. How does the S&P inclusion work? Do companies get kicked out? Yes, they do. If you fall below certain market cap, certain share prices, you're not profitable and so on. Absolutely. But I literally did a video on that. I'll show you. A bit of advertising. Palantir, Felix, S&P. There we go. We're live. Here it is. Palantir stock. This changes everything. That's a great title, isn't it? And it's me walking around London in the rain, and I'll walk you through exactly what the S&P inclusion means. But yeah, look for that thumbnail. That explains it to you. That was 2 months ago. Our titles are a bit silly. Our thumbnails are a bit silly, but that's kind of how this madness of a platform works. Good morning. Tell me something about Neo. Not allowed to open the stock. I don't know why. Neo, enter. There we go. So up a little, $7.7. So $7.50 was our support last time I checked, which is good. But look at the 50 days at $9. You need to get above $9. And it's coming down like pretty harshly, right? It's crossed through the 200-day, the 150-day moving average line. So gaps down, like it's just a bearish setup. It really is. The delivery numbers for October were pretty decent. 16,000 or thereabouts, slightly higher than I thought. And that's perhaps why we gapped up here today, unless there was something else. Yeah, it's just the delivery numbers, which were decent. So it's a nice gap up. It's true, but not really enough to make this a party. Talking about a falling knife, indeed. Love the bias here. I aim to offend all groups sort of equally, so I try not to have too many political opinions and that sort of thing. Now, EL fell off a cliff. Absolutely, EL is really like, whoa, look at that earnings. Hey, I'd love to trade that, but it's hard to trade. It isn't really liquid enough, so I didn't. But yeah, it's not catching up with that gap here. So that's another kick in the teeth. Then ding, 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 the market's open. What do you think about Alps? Still more space to grow. So Alps is the mass brand that Neo's going to put out. Well, it's an interesting thing to go from premium to mass. I did a video on this a couple of weeks back that they actually want to be one of the 10 largest car manufacturers in the world. They don't just want to be this niche player. In a sense, it makes sense because it's sort of the Tesla model of just be big, cut margins. But it also means that your margins are going to get squeezed by putting out at a mass brand. It's kind of the logic of it. QQQ woke up with a gap up this morning thanks to Papa Powell, and the employment figures were actually gapping up. That's fairly unusual for QQQ. When is the last time we gapped up? Here in July, we did it there. So what I mean by gapping up, there's a gap between yesterday's close and today's open, right? That gap there. So that's fairly positive. 1.22% up this morning. Down, so I don't get offended, I do the offending. Brilliant, that's one way of handling it. 450 laggards not hitting the like button. Is it that difficult, says Pedro. Pedro is the new enforcer. The Spanish Inquisition is here. I apologize if you're not Spanish, but, with a name like Pedro, you might as well be. Pierluigi, the Grimaldis are here. Still bond time. Yeah, I mean, look at yields. They haven't come down to 1% overnight. They've just come down from 5% to now 4.65%. So that half a percentage point will have made people in 10-year bonds about 5% overnight. So are they taking profits? Probably not. They're probably holding to at least gun for a 10% return, I would have thought. But yeah, it's coming down a bit, right? So, we might retest here the 4.55 or something like that. How much do you think Palantir can go up by, Danny? Well, there is always room for that. It's just when things go up like 21%, there tends to be a pullback. So we're at the moment here at these 1830 highs of October. That'll be a little bit of resistance. The $20 core wall is the next resistance up to $19 probably, also to some extent. But 20 is kind of the hard resistance. So be interesting to see whether people take this as an exit, profit-taking opportunity, because a lot of calls sitting around here at 17 that might, they become very profitable. So they might just take profits and that'll unwind the trade a little bit today. Pierluigi, you agree? I'm always very nice to hear. It's always nice when people agree with you, isn't it? But you can also disagree with me. I'm equally happy. JV says, happy Thursday. Same to you. Lukbo says, real estate income will rise like Phoenix from the ashes. Yeah, at some point, the REITs will come back and all of that. I still think commercial has got a bit of pain to go. But yeah, I think you have a point, monsieur. Any other questions, chaps? This is the Palantir chart. It's the happiest chart of the day. Anything down today? Moderna is down. Oh yeah, they were sitting on $3.5 billion of COVID stuff that nobody wants. They're going to have to burn it. Starbucks is up 10%. Whoa, look at that. Whoa, look at that. They're handing out free frappuccinos at the call or something. Earnings are up 9%. That's good news for once. Stock's been pummeled a bit. Let's hope that holds up. Starbucks is a good company. They deserve it. Open Door also up 10%. Just doesn't look as impressive. Caverna is up 10%. Got a lot of big moves today. Square up 5.8%. Plug unexpectedly and unreasonably up 6.7%. Rivian is up 5%. So all the crap is floating to the top of the surface today. Uber is up 4.5%. Nice one, above the 50-day moving average line. Interesting, interesting. We might have to do some trading today. Airbnb is down 2% after earnings that were pretty decent, but apparently we're not that interested today. So we're going back down. AMD losing a little bit of yesterday's gains. But yes, most of the market is looking pretty green and beautiful. Shop, let's have a look at Shop. Yeah, also 15% up. Very nice. Above the 50-day moving average line. That's where you want to stay. So technically buy signal. And what do I do with these gaps? Do I just jump on them the day that it happens? No, I wait for the day to close. I wait for tomorrow to open and then see what happens tomorrow. And it just means, yes, you miss the golden opportunity in the one window, the only time you could ever make money. Now, you can make money any day. It doesn't really matter. So I take the risk, a lot of the risk off the table by waiting a day, maybe even waiting 2 days. If this thing is still above the 50-day moving average line by the end of tomorrow, then I might just get bullish on the stock. What do you think about Rivian? Not a great deal, to be honest with you. Not a big fan. It's valued at $16 billion. What's the revenue? Let's have a look. Okay, cash flow is obviously a disaster, but do we have any revenue numbers? Hang on. Revenue, total revenue, quarterly. Revenue is $1 billion. It's like 15 times revenue. It's quite a lot, isn't it? It's quite a lot. They're not making any money. So live trading tomorrow, Thomas? Quite likely. Quite possible and quite likely, Thomas. I know I've been a little bit sitting it out because, we've had all the big tech earnings. We have the Fed, we've got Apple tomorrow, all these things. So you just I've done a few trades and I pinged them out to you, right? But mostly I'm doing relatively little, just preserving the good old capital. Even ARK is up. Oh my God. Well, everybody gets lucky sometimes, don't they? Being mean to ARK. Powell says he's cancelled the recession. What do you think? Well, he hasn't quite said that, but he came up with this soft landing miracle in which he was essentially saying, literally, this was the story from like a year ago. He said, well, imagine like landing an airplane and sometimes you land and it sort of thumps you quite hard. You do this in your seat, even when you fly private. Or, you get a little bit of a gentle bounce and then you land and then it's very, very smooth. And he was aiming for the little gentle bounce. So he might just get that. It won't be because he's done something right. It'll be because the president is spending so much money that a recession is near impossible. Right? The underlying economy is in recession, but he's just throwing money at it. And therefore, we're not really getting a recession in the numbers. What do you think about Apple tomorrow? Yeah, a little bit concerned about it, to be honest, because I think laptop sales will be down, and I think phone sales will be down. So the question is, how do they salvage this, right? What is it that's there? Will it be guidance? Will it be service revenue? Will it be lower cost bases? Like, what is it that we're meant to be excited about with Apple? I think, if World War III comes, I don't think I'd worry that much about the trading portfolio, to be honest with you. I'd be more concerned about the nukes flying overhead, that sort of thing. So, it doesn't really matter. You just go and, rob the nearest grocery store like everybody else. You think phone sales will be up? I don't know. They've been falling for a long time, iPhone sales. And if you look at the replacement, people are replacing their mobile phones more slowly. China is buying a lot less Apple phones because, well, sort of Huawei nationalism and all that kind of thing. And plus Huawei makes very good phones and they're cheaper. So, yeah, a little bit concerned about it, but we'll see. Hopefully I'll be pleasantly surprised. Righty-ho, chaps. Any other questions? Pop them into the live chat. This is your opportunity to ask me something tremendously difficult. And we're getting out today, tomorrow, unemployment and non-farm payroll. That's, of course, the next litmus test. But given how the unemployment data is spectacularly well manipulated, seasonally adjusted, it'll probably be fine to ensure certain people get reelected. And then we pretty much have some smooth sailing until the next Fed meeting. So we could have quite a nice 3-4 weeks up here. What data are you watching next week? Next week, let's have a look. I don't think there's a lot. I mean, there's always Thursdays, there's always jobs data, but there isn't really much next week, which is quite nice. So we can just trade to our heart's content. I don't think there are any big earnings next week either. Hang on, let's have a look. I think we're through the thick of it by the end of tomorrow. Let's just make this the big boys. So yeah, next week, okay, Berkshire, but that's sort of okay, like insurance and all that kind of stuff. And Disney, yeah. Do you think Disney's going to get cancelled with this whole, what is it, South Park nonsense and all that kind of thing? I don't know. They might be the next Bud Light. Yeah, Home Depot is good. These are not, Walmart and all that. I don't think any of this really matters that much. So I kind of think we're into quite a nice, 3-4 week trading period coming up here. Would now be a good time to buy Palantir puts to cover a drop. Probably smart move, Howard. I like the way you're thinking. So I'm not obviously recommending you ever do anything. It's not financial advice and all that kind of thing. But if you wanted to buy cheap puts, then although IV is still pretty high from the jobs, from the earnings, so might be prudent to wait a day and wait for the drop in implied volatility. So let me show you that. So if you look at historic volatility, at least, which is not the same thing, but sort of an approximate. See how high volatility is because of the earnings up here? That'll come back down after earnings. It always does. This was last earnings. It comes back down. And then options are much cheaper. So if you're buying a put, so put till next week or maybe even till December 15th at the moment costs you $147. My guess would be it'll be cheaper tomorrow. But in general, I like the way you're thinking. LDP, you think Disney's finally gonna start doing some thinking? I didn't think people at Disney did that. They just sit there. I just imagine they all sit there and they just eat sugar candy, floss stuff, whatever you call it, and enjoy themselves. Really, I think that's kind of what they're doing. But it's up to date. Let's see what the earnings bring. But yeah, it's still keeps bouncing off that 50-day moving average line. Did it here? Did it here? Did it basically here and there again? So is it going to do the same thing again here? Well, it's been doing it reliably since quite a long time, really. How far back must one go? Like a long time. At least 2021. That's when time began, sort of thing. Yeah, so since about a year and a half, basically. I'm not paying $147. No, it seems a little steep, doesn't it? I agree with you. I would wait a little bit on lower IV. Oh, my aircon's leaking through the light socket. Is that a good thing? Water running through the light socket? I'm not an electrician, but probably not good, is it? Probably not good. I don't know if you can you hear that? See it? No, camera doesn't pick it up, does it? No. But yeah, that's probably not a good thing. Water coming through the light sockets. Brilliant. So, needs servicing. Yes, your neighbor has a leak. No, it's the aircon. I think it needs to be cleaned or something, probably. How hot is it there? It's hang on, Hong Kong. I'll show you. It's warmish. Not really at the moment. It's quite pleasant. You're more of a Fahrenheit guy. It's 74 tonight, but in the day it's about probably 10 degrees more with the sunshine easily. So it's been absolutely glorious here at the moment. But yeah, it still feels pretty hot in the day. Um, you can see it leaking. Okay, it's a feature. It's condense line clogged. That's probably it. You see, there's someone who knows what he's doing. There's a little puddle on the floor. But yeah, it's just that it's coming out of the light next to it. That's what worries me a little bit. I don't mind a dripping aircon, but okay. I was swimming yesterday in Croatia. Oh, that sounds lovely. Croatia sounds good. Uh, you mentioned fintechs getting beaten up, says Carl. Yes. So if you look at fintech, I mean, any old fintech ETF will basically show you what the sector is doing. Global fintech or fintech, all of it. Well, we're drawing lines, but you get the. Let me remove the lines here, but you get the idea, right? We're getting beaten up pretty severely here from 2021 tops. Still very, very, very much beaten up. So when does that stop? Well, I think at one level, the fintechs have to become profitable, like your SoFis and so on, have to actually make money. And then secondly, it'd be nice if the banking crisis would end. And it'd be nice if they were. The challenge for them is people, if you value them as banks, the size is that of a regional bank. So you value them with all the crap, basically. So you say this is just horrible. If you value them like tech, they're non-profitable tech. So you value them with all the tech that everybody hates. So they're kind of like in two baskets that are really, really unpopular at the moment. So you at least need to get out of the high interest environment, I would say, for this to really turn around. So recession might be quite nice for them. Felix will be swimming soon. No, it's actually slowing down, which is good. Clogged condensate drain. Yeah, I'll have to get someone around for that. I'm not going to climb outside of the window and do it. Shops up 17%. I think Palantir is also gloriously up. Something like 20% last time we checked, 19% here. Let's have a look at the day chart, actually, the minute chart, rather. Let's see where the madness is happening. So we were at one point at 1814, coming down a little bit here, but still pretty strong trading. PayPal is already back to where it started. Yeah, well, we weren't really expecting that much from it, but it's up 3.4% today, at least. It's better than a kick in the teeth. I mean, compared to yesterday, but I see what you mean. Like, we've lost some of the overnight glory back down to sort of where we started, right? So it's not like amazing, is it? We are basically starting to fill the gap from yesterday, which isn't brilliant. But then, yeah, I'll have a full video out on it later today. I think there's some optimism there, but it's a little bit too soon to call it a win. Just pour it in. The water, that is it? You know, whenever someone says something is collapsing within 10 years, it's a great headline, isn't it? Nobody knows what happens in 10 years. Nobody knows what happens tomorrow or next week, really. So in 10 years, it's a fairly pointless forecast, right? Oh, the AC unit. Yeah, I don't know how to do. I don't know how to do any of that. I'll get someone around and they'll climb outside and put a harness on and that kind of thing, and I will leave them to it. That's sort of the way I handle aircon repairs. There we are. If you haven't already, signed up for the trading training on Tuesday, where I will show you how we trade one stock, completely rules-based, and how you could potentially make some really nice passive income with that in just a couple of hours a week. Join me on Tuesday, 10 a.m. on the 7th Eastern Time. And I'll teach it to you. Very simple. It'll be free too. Look, I thank you for I'll thank you for tuning in. Loving all the aircon comments here. Every 4 months maintenance. Really that often? Oh, I don't know. I think we have a contractor for that. I don't know. I don't think they come every 4 months, do they? Maybe. I don't know. Anyway, I thank you for tuning in. We'll run a full aircon session tomorrow. That's all we'll be doing. We'll be taking the thing apart. You'll see me in a blue overall and a hard hat. And I appreciate you watching and tuning in. Thanks very much.